Good morning. Welcome to Stock Market Today. It's Tuesday, January 7th, 2020. I am Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities moved higher Monday, recovering from earlier losses to close at the best levels of the day. Treasuries were weaker across the curve. The dollar was down against sterling and the euro, but stronger versus the yen. Gold was up 1.1%, still seeing a little bit of a flight to safety there. And WTI crude settled up 30 basis points, but off the highs of the day after that strong rally on Friday. Your leading sectors, comm services, energy, and healthcare. Your underperformers, materials, financials, and industrials. As we get to the desk this morning, S&P futures are slightly higher to start the day, and that's on the heels of gains in Asia overnight. And while equities in Europe trade higher here this morning, treasuries are unchanged to slightly stronger. Dollar is stronger versus both the yen and euro. Gold up 10 basis points. WTI crude giving some back. It's down 90 basis points to get us going on a Tuesday morning. Looking at the structure of the S&P 500 here, you can see this big bar here. We reverse early gains to close near the highs of the day. Now, we're still identifying near-term support in the 3150 to 3200 range. Down below that, we have to start thinking about 3050. RSI is in bullish ranges. Now, we've slightly worked off the overbought condition that we were highlighting last week, but the indicator remains in bullish ranges, confirming the price trend. At the same time, Chaikin money flow has rebounded, is bullish, and is once again moving higher. It actually did not become negative, what we were potentially on watch for when we were talking about this last week. So news and headlines aside, market structure remains the same. In a slight consolidation here above support, the trend remains higher. Continue to look for the leading stocks in the leading areas of the market when those stocks are oversold, especially if they're oversold with bullish money flow. The strategy remains the same. We've highlighted the key levels. Once those key levels are broken, you start to think about changing your plan a little bit, but you know that ahead of time, right? You know what the key levels are ahead of time. Prevents you from having to make emotional decisions in the heat of the moment. Let's turn to our market in a minute now. What are we writing about in our note today to Chaikin Analytics clients? Well, we already touched on equities erasing early losses to close near the highs of the day. Interesting to me that energy remains a bearish sector based on our power gauge rating, despite the strength in crude oil. Materials break below key relative support. We'll take a look at those charts a little bit later in this show. Retail is a bullish industry group within the consumer discretionary sector that's holding relative support. We'll take a look at that as well. It's Tuesday. I do my relative strength work on Tuesdays. Futures, as I said, do point to a slightly higher open here today. So you can see the rebound across the major averages yesterday. The Dow added 23 basis points. And from a power bar perspective, though, we're back to even. 5 bullish or very bullish stocks for 5 bearish or very bearish stocks. S&P 500 added 41 basis points, 114 bulls to 65 bears there. The NASDAQ was an outperformer, up 65 basis points yesterday, 24 to 10 bulls to bears. And we're going to watch the NASDAQ today because an important semiconductor company, Microchip, was out with some positive commentary today about where they think we are in the cycle, and that's lent a bid to the semiconductors here this morning. Small caps underperformed. They were higher on the day, but they were underperformers, up 14 basis points. 685 bulls, 249 bears. So we've seen some deterioration in the power bar, right? For the most part, still bullish, but some deterioration there. Bonds downticked, sending yields higher. Communication services, as I said, was the leading sector, up 1.34%, 4 to 0 bulls to bears there. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets are mixed. Let's hit our stock of the day now. Commercial metals. CMC, the ticker symbol there, closed at 22.12, down 27 basis points yesterday. CMC has a very bullish Chaikin power gauge rating due to very strong earnings performance, very strong price volume activity, attractive financial metrics, and positive expert activity. So we take the 20 factors, 5 in each of these 4 categories, come out with a very bullish rating for a stock that's in a strong trend. above this rising long-term trend line. Strong industry group, metals and mining, has been coming on of late. A little bit of a mixed bag from a timing standpoint. Certainly the type of stock we want to consider owning as that very bullish rating is met with an outperformance relative to the SPY. But we're neither overbought nor oversold, and money flow has taken a turn towards the negative side here. They reported earnings, some volatility around that report. To me, this can go either way. If you're on the more aggressive side and you want to take a look at CMC here, I can't argue with it. If you want to be a little bit more conservative, especially with some increased volatility in the market of late, you want to wait for an oversold condition, you want to wait for money flow to improve, I can't argue with that either. It really comes down to knowing yourself. Are you more aggressive, or are you a little bit more conservative when it comes to your idea generation at the individual stock level? CMC, type of stock we want to consider. Whether you want to consider it today or wait, you really have to ask yourself that question. But it's an interesting name, and at the very least deserves to be added to a bullish watch list here this morning. Let's take a look at the sector tracker now. Movement of the major sectors over the last 5 days. Thank you, Google. Comm services, big outperformance yesterday, largely a function of strength in Google, and that group is at the top of the list. Now, energy has come on of late, but the relative trend is still bearish, right? Crude oil helping here, but not helping all that much when it comes to the relative trend. We'll take a look at that a little bit later on in the show. Industrials, another area of the market that have shown up on an absolute basis, relative trends there. Still not a lot to get me excited. I'll talk about that in my note today to Chaikin Analytics clients. Tech, discretionary REITs, and financials are middle of the road and all higher. Healthcare is higher, but towards the bottom. Utes, staples, and there's your materials. We're going to take a look at the materials a little bit later on. Big relative breakdown in the materials despite a rally in commodities. Utilities and staples, more of your defensive areas of the market, underperforming. So if you're bullish on the market and you're bullish on the cyclical call, despite the headlines, it's encouraging to see the utilities and the staples towards the bottom of the list over the past 5 days, despite everything that's going on in the Middle East. Let's hit our industry in focus now. It's healthcare equipment services, which over the past 6 months has been a bit of an underperformer, lagging the S&P 500 by 2.34%. However, that power bar ratio, which measures future potential, is strong. 13 bullish or very bullish stocks in healthcare equipment services for 9 bearish stocks, currently ranked number 12 of 21 subsectors, and it's moved down 1 slot over the past week. Of those 13 bullish and very bullish names, some of the indicative symbols there: Angiodynamics, ANGO, has a very bullish rating. Integer Holdings, ITGR, has a very bullish ratings, and Natus Medical, NTUS, also with a very bullish rating here at Chaikin Analytics. And if we take a look at the fund, I'd argue that it's a bit of a mixed bag here, right? We do have that bullish ETF power gauge rating and a strong trend above this trend line. We already talked about the power bar ratio, 13-9 in favor of the bulls. However, here's that relative performance, and it's just not enough there yet to get me excited. Now, have we improved since the lows in the October-November timeframe? We certainly have. Money flow is bullish. Overbought, oversold indicator, not quite there yet. We do have a breakout above the 84 level. What I would love to see is for the 84 level to hold and work off, towards a oversold condition. This is if you're looking at individual ETFs, but I really want to see this relative strength start to come on before getting more excited about the group. It's a mixed bag. I think there's some opportunities at the stock level, but I would really love to see that relative strength continue to improve and this group begin to outperform the market to increase my conviction on the group. Regardless, I think we should be paying attention to the names within XHE for potential opportunities. Now, what's trending? Yesterday's S&P 500 gainers and losers. Abiomed, nothing really company specific. It did lead the healthcare sector on the day. Gap, GPS, actually caught a downgrade yesterday, but the stock was higher by 4.8%. Salesforce.com caught an upgrade. CRM, the ticker symbol there. Bullish rating at Chaikin Analytics. Caught an upgrade yesterday, up 4.4%. EOG had a positive mention in Barron's over the weekend. Stock higher by 4%. Didn't see anything company specific to drive trading in Macy's, as that stock was up by nearly 3.5% on the day. Note out of JP Morgan yesterday. Some comments in there. I guess investors didn't like what they read. Very bearish stock for Under Armour already, sends the stock lower by 6.4%. L Brands gets a little bit of a pullback. This stock was higher by nearly 8% on Friday. Same with LW, right? LW reported solid earnings. Stock rallied on Friday. Gets a bit of a pullback here yesterday, down a little over 3% on the day. Carnival, didn't see any real news in Carnival. It could be the rally in oil impacting some of these travel and leisure stocks, right? Some of the airlines have come under pressure of late. Obviously, fuel a big expense for a cruise line company. So Carnival coming under pressure, down 3% yesterday. And PKG, didn't see anything company specific to drive trading in PKG, stuck down nearly 3% on the day. So let's get into it. Here's energy, right? And it's still bearish despite crude, right? Crude has rallied, right? Tensions in the Middle East lend a bid to the price of crude oil. But here's XLE relative to the S&P 500. And we've been talking about it for the past few days because it has become less bad, right? We've had this near-term rally. But bigger picture, take a step back if you're thinking about going bottom fishing in the energy complex and look at this trend that's been in place since mid-2018, right? So nearly a year and a half, steady downtrend for energy relative to the S&P 500, below a precipitously declining 200-day moving average. Now, some signs of maybe waning downside momentum as we have a series of higher lows for the RSI. But check it out. Even as crude has rallied here of late, not a lot of upside push on a relative basis for the energy complex. Now, within Chaikin Analytics, XLE, the ETF that we're tracking here, does have a bearish ETF power gauge rating. Power bar ratio, 1 bullish or very bullish stock there for 2 bearish or very bearish stocks. So not a lot of information to discern there. A lot of neutrally rated stocks within the model. So could things be getting less bad? Sure, we can make the case that downside momentum is waning. But really, until we break this downtrend on a relative basis and until we see the power gauge rating go towards bullish for the ETF, it's really hard for me to get excited about energy as I look at it, right? Still in a downtrend on a relative basis, still a bearish fund on an absolute basis. Maybe some signs of a shift as oil moves higher, but not really seeing enough here yet to get me excited. Continues to be an area. I continue to look elsewhere for bullish ideas is how I like to think about it. Another area that fails to excite me that I thought could be putting in a bit of a base on a relative basis, but I was wrong. I thought the rallying commodities would help materials, but that's just not the case. In the top of the chart, we're looking at materials on an absolute basis, and you can see it, and it's in an uptrend, right? It's been rising with a rising market, but over the past couple of days, big downturn lower, now trading below the 50-day moving average. Still below the 200-day, still above rather, the 200-day moving average, which has been support to pullbacks of late. RSI failed to become overbought on the most recent move higher and is now pushing back towards the lower bound of bullish ranges. But what I'm keyed in on are 2 important data points. Number one, on a relative basis down here, materials breaking key support relative to the S&P 500. So right away, that tells me I don't really want to be anywhere near this group if I'm looking for bullish ideas. On top of that, the ETF power gauge rating is neutral, but look at the power bar ratio. 0 bullish or very bullish stocks for 9 bearish or very bearish stocks in the XLB. So there's just nothing to get excited about within the holdings of this fund at the moment. Could that change? Of course it could change. But right now, we have a relative breakdown for a neutrally rated ETF where there are 0 bullish stocks and 9 bearish stocks, not an area of the market where I want to go looking for ideas. And I kind of find it interesting because commodities have come on strong of late. Finally, retail is bullish as discretionary holds relative support. Here's the XLY relative to the S&P 500, holding this relative support level as the RSI makes a series of higher lows, indicating that downside momentum could be waning. At the same time, here's XRT. Take a look at XRT. It's moving higher after breaking this downtrend line. Has a bullish ETF power gauge rating, 21 bullish stocks, 15 bearish stocks. Could be an interesting name or area of the market to go looking for ideas. That's going to wrap us up for today. I will be back here with you tomorrow.